And what we're going to talk about in this video, I think, is going to be hopefully super eye-opening. And this is just from my experience. I'm going to tell you about what I think is the kind of over the years what's caused my biggest losers, and maybe you can relate to it. So stick around. We're going to get into that. Make sure you like and subscribe to the channel right now. That's going to directly impact how much content I put out. So today, what I want to talk about is strategies, and I think one major contributor to why people lose money. So let's get into that. So I've been thinking about this a lot lately, especially as I've tested so many strategies and just to see the performance over time. And there's a lot of just textbook simple strategies, lots that we've covered on this channel, from the MACD crossover to even the Hall moving average, that over a large enough sample size, and when you let the statistics play out the way that those systems were designed, that they are profitable systems. But what seems to happen is, and I hear this all the time, maybe you've experienced it, is you take the system, you test it, seems to work, you take it to a demo account, seems to work, you take it to a live account, and maybe you start losing money with it. And I think we've all had this happen at one point or another, and I know I have. And when I think about that and why I maybe lost money in those cases, I think it's because I was playing a mixed strategy. Now, let me explain. So, one of the common things, let me just pull up a whiteboard here. So, if you're gonna, don't judge my artwork. I'm terrible at drawing. Plus, I use a mouse. So, let's say we take 100 trades with a strategy here. And these are 100 trades. And out of those 100 trades, you're going to get somewhere with a decent strategy anywhere from 40 to, let's just say, 55% win rate. With like, this will be the win rate, something in that area, and like, that seems to be super common. And I'm just going to write win rate above it. And then the risk, or the reward to risk, is usually going to be something like let's call it a 1.5 to 1, or a 2 to 1, depending on where you are in that spectrum. So the back test kind of looks like this, one of these risk reward numbers. So these systems are profitable. If you were to take this and you were to do, instead of 100 trades, you were to do 1,000 trades, all that would normally happen is, if you're trading in normal market conditions, that it's just going to smooth out these numbers, and it'll be 41.2, and it's going to be, it should be fairly consistent. I'm talking about the simple strategies that we've looked at on this channel, not these super complex things that are overfit to the data. All right, so when we look at that and we back test it, we get some good numbers. Then we take it to a demo, we get some good numbers. Then we take it to live, and we don't get as good a numbers, because lots of times I think on that live account we're trading multiple strategies. So maybe you're trading, say, a moving average crossover, and you're trading maybe a Hall moving average strategy. So you have multiple strategies. Now, what the investment industry has kind of been saying for years, and maybe it's built into all of our heads, is that if you were to invest in a portfolio, you're going to invest in a lot of stocks, and no one stock is going to bring down the whole portfolio in a mutual fund. So it's this diversified strategy. So the difference that they claim in this diversified strategy is that you get a smoother equity curve. So if this was the kind of the equity curve of a diversified strategy, it seems to go up over time more smoothly compared to if you just own one stock and then it gets super volatile, and that equity curve might look something like that. And I think this happens in reverse when we look at trading. And I'm open to being wrong on this, but I don't think I am. So when we go and we trade multiple strategies, what happens is this strategy up here, when we tested this, we found out that getting 8 losers in a row is not uncommon. And getting 8 losers in a row in our test and our demo, it was fine, but on a live account we're like, oh, we got 8 losers in a row, let's go ahead and switch from our MACD strategy to our Hall moving average strategy, which is common to get, say, 7 losers in a row. And then we just continue on this, for whatever reason, this losing streak. So we hop to this strategy, and then it gives us like 7 losers in a row. And we jump back and forth between these at the worst times. And I think this is what happens. So we jump back between strategies at the worst time. So we, right when, say, the MACD is about to turn profitable, we jump into the Hull strategy, which is putting up losing trades at the moment. And then we get these massive drawdowns from trading multiple strategies. Because what I've noticed is if I trade one strategy, one account, and just trade that strategy alone, my account equity curve is much smoother than with two. So that could just be me. That could just be me. But I have a feeling it's not, because whenever you buy these courses from these quote unquote gurus, they feel like they have to give you multiple strategies to justify the money. You probably feel like it too, rather than just trying to master one setup and trying to take this setup that was 40% win rate at a 2-to-1 reward to risk to a 45%. So, and that brings me to the next point. The next point is, if we do this and we're only taking the best trades, that's one of the best ways to get this number to up to 45% win rate. And that's going to have a drastic impact on the bottom line over a large enough sample size. So it also requires a person to look long term and understand how to trade probabilities. And I think this is a key factor, because we want to judge how the performance of a strategy works when you start out often by what was the last trade, was it profitable, or what were the last 10 or 30 trades, and that's really not a big enough sample size. Like, we have to let the probabilities play out. So in doing so, I think that's what leads to a lot of losers. There's 1,000 other factors, sure, but for me, this has been kind of a main source over the years. So I'm sticking to trading one key strategy, one core strategy, and that's it. So if you're looking to trade a different stack of indicators, and try it out. Are you having these challenges? Because what I want to show you now is exactly what that looks like. So here's a few trade setups just from today. Let's look at these. So we have the pound ZAR, we have the USD ZAR, and we have the ZAR yen. Okay, so out of these strategies, I think one of the keys is picking the best setups. So all of these are setting up around the same time, and those of you who've been watching my content for a while know what I'm looking for as far as the setup goes on this type of structure. We had a nice, beautiful downtrend intact, and we had good breakouts intact. So the question is, when these set up, when all three of these set up, how do you determine which one to enter? I mean, they're all very similar times. So if I look at when this breakout happened, right down to the hour, this is at 0600 on today. And on the other pair, breakout, this is 2 hours later, 0800. And the next one, this is 0400. So you can see they're all roughly within 2 hours of each other, these breakouts happen. So when you're looking at these and you're looking at these setups, how do you decide which one to take? Because each one could be triggering a different system. Maybe one of the setups is not as clear, is not as high quality as the other. And that brings me to my next point. And I think if we go back to this and increasing profitability, one of the key things that, again, not too many people here on YouTube talk about is, like, if you're trading, say, the MACD crossover, or you're trading, let's just stick with the Hull moving average strategy, you're trading one of these strategies, an important part is grading the setup. From 1 to 10, what is the strength of the setup? A 10 being perfect. It's a perfect setup. And is it a 7 out of 10, an 8 out of 10, a 9 out of 10? And then in your rules, do you only take setups that are 7 out of 10 or greater? And how do you grade that? And having an objective kind of measure as much as you can, because lots of these setups are subjective, a bit subjective. They're discretionary because price action can unfold in an infinite number of ways. But looking at that, and then how does this performance fare when you're only trading those high probability setups? So I think focusing on a proven profitable strategy and trying to optimize it might be the best way to grow an account, rather than jumping from strategy to strategy. that many people tend to do, because there is no holy grail. These are the numbers. This is, people might say this isn't gambling, but I mean, it's literally gambling. We're playing odds. So in doing so, all we're looking to do is either increase our reward to risk or increase our win rate. That's the game. And price action can only, like, price is binary. It can only move up or down. So, it's pretty much the flip of the coin. So that's my thoughts on this. This has been pretty off the cuff. Let me know what you think. Let me know your comments below. Am I completely out to lunch? Do you agree with what I'm saying? What has your trading experience been like? Let me know.